we have a new administration coming into office, and the policies are going to be radically different than the prior administration. And even, this is Trump's second term. It'll be even different than his first term.
Remember, because I think the market's going to get choppy. So just remember your investment strategy, why you're invested the way you are, and stick to it. Timing the market is much better than timing the market.
On this episode of Early Bird, what will be the top investing themes in the stock market in 2025? Plus, what stocks should you buy this year and which stocks should you avoid? Joining us today on the podcast are Jason DeLorenzo, founder of Volland, and Marcus Sturdivant, an advisor. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. Hello, everybody. Welcome to the Early Bird podcast. It's Stephen Lerner. We are focusing today's discussion on the most important investing themes as we enter the market here in 2025. Joining us today on the program are Jason DeLorenzo, founder of Volland, and Marcus Sturdivant, who's an advisor. Thank you both for coming on the podcast today to discuss this critical topic. Thank you both.
Stephen, pleasure talking to you.
Yeah, thank you, Stephen. Appreciate it so much for having us on. Happy 2025, everyone.
Yeah, so to get this started, I kind of want to just keep it real simple. If you could, and I know we're looking at this at the very beginning of the year in 2025. Who knows what will happen in the year? A lot of us were just making predictions right now. But if you could, I don't know, assign one word, just one word that describes how you think the market will turn out in 2025, what do you think that one word would be? Marcus, if you can go first, just real quick, that one word that you think might best describe the market that we're about to enter in 2025.
Meticulous.
Meticulous, okay. And Jason, that one word that you might say to describe the market as we enter the new year in 2025.
I'll say volatile. I think there's going to be some wild swings in 2025.
Volatile. Two very different words here, two different very meanings. So let's kind of unpack what's going on here. Jason, we'll start with you. With volatility in mind, what do you think will be the most important investing themes in the stock market in 2025?
So I think there will be two main themes. Primarily, to start, we have a new administration coming into office, and the policies are going to be radically different than the prior administration. And even, this is Trump's second term. It'll be even different than his first term. He's a lot more experienced, and he has more goals in mind. He's had a long time to think about how he would change America. The three policies that he's been clear on is the first, the deportation of illegal immigrants. The second would be his policy about punitive tariffs. And the third would be shrinking government. And starting with illegal immigrants, if he deports all of them, we had a large influx of illegal immigrants in the Biden administration. If they become deported, that will reduce demand domestically and also create labor increases, or labor wage increases. Because of that, that'll cause kind of a stagflation issue. I'm not saying that we shouldn't deport all the illegal immigrants and I'm not talking from a virtue standpoint, from a moral standpoint. I'm just talking from an economic standpoint. There is going to be a lot less demand, and low-skilled labor is going to have a lower supply. So and demand is not going to decrease for that. So I think that some labor costs from for low wage employees is going to increase. As far as punitive tariffs go, America is primarily an importing country. And while America is strong economically, according to our GDP calculations, tariffs will raise prices because on many goods that are imported. China, Mexico, Europe are the primary targets, it seems, for Trump tariffs. And it seems like he's going to implement those quickly in his administration. That will also increase prices and increase inflation as well. And then shrinking government. Shrinking the size of the government is probably something that is needed to be done. However, it will also shrink the economy. The government's paying out less, so the economy will also shrink. And that will, overall, all three of those policies will create a shrinking economy, but expanding inflation. And that is the definition of stagflation. So I think that is going to be probably the biggest key theme. But then in the latter half of 2025, I think that public and private debt are going to come into focus. First, credit card delinquencies are increasing higher than in pre-pandemic levels. Right now, they are at 3.23%, and it hasn't been this high since the global financial crisis. Consumer loans, delinquent consumer loans are at 2.74%, also not this high since the global financial crisis recovery. On the public side, currently 23% of all payments by the U.S. government are made to pay interest on the debt. Right now, Treasury demand is strong enough to handle the debt, but soon the supply of domestic treasuries are going to skyrocket unless the government is shrunk enough to handle these costs, which it really can't be. So I think the breaking point will be when bank reserves can no longer have the liquidity to handle the increased supply of treasuries. So we have to watch Treasury auctions for when that will be.
Wow. So you brought up a lot of good points about what could be on tap in 2025, starting with the new administration. Marcus, before we get into some of the themes you might see in 2025, do you want to respond to anything, Jason may have just said, anything about the new administration that seems to be a big, prevalent potential theme in 2025?
Yeah, Jason made some great points. I would like to point out, as far as what the administration goes, people are generally pointing to the fact and referring to it as how it came into 2016. And as Jason mentioned, this is a totally different administration. President-elect Trump is much more prepared this time. He's getting his cabinet in order, everything set up either way it goes, for it to be prepared for him to start initiating some of his moves day one. I think to compare the actual administrations, it would be better to look at 2018 as an entering point. That's where more of these tariffs were started to be implemented. That's when the Congress was more shifted like it is now. So just looking at 2018 as more of a reflection point as to what's to come. But obviously we don't have the same geopolitical forces that we have been. So I think Jason made a great point on that. With the with the immigration, yeah, that's going to be inflationary at first, maybe the whole time, because as he mentions, these lower earning jobs are going to be deported and people are going to have to take those jobs. People probably won't take those jobs at the same wage. So,
yeah, the good points you brought up about the administration. Obviously, the new administration is going to be a big story for 2025. It's going to impact the markets. But beyond the new administration, what are some of the other big themes that investors should keep an eye on in 2025?
Gotcha. So obviously you have artificial intelligence and all the money that's going into there. I mean, that could be something I think that may could be seismic shift to the market if some of these AI companies were just to miss some of their earnings potential. That could be bad. Geopolitical tensions, as Jason mentioned, and then the Federal Reserve, just what they're going to do, how are they going to handle these interest rates? Are they going to be data dependent? Are they behind right now? Are they playing catch up? And what is the effect of a Santa Claus rally that didn't happen? We're coming off of 25 and 23% returns in the S&P. So people should probably temper their expectations as far as that goes. If you're out here expecting to get 25% again, I'm telling folks that I work with, just temper your expectations as far as that goes. So just tying back to being meticulous, you want to be careful, show great attention to detail in what you're picking as far as what you're investing in. And yeah, remember, because I think the market's going to get choppy. So just remember your investment strategy, why you're invested the way you are, stick to it. Timing the market is much better than timing the market.
Great points. Great points there, Marcus. Jason, real quick, it sounds like, we may have to lower expectations for the year. There was not a Santa Claus rally heading into the new year. Do you agree that we might want to lower those expectations going into 2025 a bit?
Well, lowering expectations from 30% shouldn't be too tough. It's not a normal year as far as returns go.
Mm-hmm.
So, yes. However, I also think that we should lower expectations even to beat even like rates because, like Marcus was talking about, I mean, I kind of wanted to focus on what he said about the FOMC. By design, monetary policy and fiscal policies are separated. The FOMC, led by Jerome Powell currently, is the head of monetary policy. So that's raising and lowering interest rates, buying and selling bonds and growing or shrinking their balance sheet. Those are monetary considerations. Donald Trump, or Congress technically, but Washington, D.C. is in charge of fiscal policy. That is collecting taxes, paying them out, deciding how to spend their taxes. Is it going to go to handouts? Is it going to go to government services, defense, etc.? So Jerome Powell and Donald Trump have had a contentious relationship, even though Donald Trump had said he doesn't plan on trying to push Jerome Powell out, and Jerome Powell has publicly stated that he will not be pushed out. So there's already a contentious relationship, at least for the next 2 years. And I think that monetary policy is going to have to constantly play catch up to the fiscal policy that is out there. As far as AI, that was another good point by Marcus. Will they monetize eventually? And I think that the sentiment around AI could sour in 2025, like Marcus kind of alluded to, mainly because whenever there's these new technologies, from the internet in 2000, cryptocurrency had a massive dip before it rose and, Bitcoin came back to 100,000. A lot of times these, even cloud computing, a lot of times these new technologies have an initial surge as people's imaginations run ahead of the technology. Then it comes down as reality hits, and then another slow climb to monetization. So I think that we've had that initial rally now in AI with NVIDIA going up 100%, and other, TSM, Taiwan Semiconductor, also going up quite a bit. I think that there may be a pullback in these stocks.
So, we just described some of the big investing themes for 2025. We described what people should watch out for in the market. With that in mind, I want to take a look at some of the sectors and stocks that investors may want to buy in this environment in 2025. Marcus, I'll start with you. Are there any particular sectors or stocks that you really want to buy in 2025?
Yeah, so as far as sectors, I'm actually looking into cybersecurity a little bit more here lately, just with the threats of ransomware, spam attacks, these types of things. I think one happened just the other day, earlier this week. Individual names are kind of like CrowdStrike, I've invested in, Palantir. Even though Palantir was the highest earning stock in the S&P last year, I don't expect Palantir to be the highest earning stock again this year, but Palantir has shown that it's pretty durable. It's been through both administrations. They have government defense contracts, so they're pretty strong on that front. As far as, like I said, the cybersecurity sector, Palo Alto will be a good name, CrowdStrike will be a good name, but if you just want to maybe follow themes, $1 trillion went into ETFs last year. A good ETF for cybersecurity would be the CIBR. You want to look into that one. Inside there are smaller cybersecurity companies that may be bought up inside of cybersecurity because you can't really pick all the winners and losers out of that. But it has your exposure to CrowdStrike, exposure to Palo Alto. As far as another stock that I'm actually bullish on, I like Uber a lot going into this year. Uber took a big hit at the end of the year, really based on nothing fundamental. As far as why it would take a hit, it was more of just the opposite of the Trump trade. It was like as Tesla went up, Uber went down, and those things don't have to be mutually exclusive. So I think Uber is working and building a super app where they will eventually link with Waymo. Tesla will probably be involved in there. Like right now, their problem is capacity. They can't meet the capacity with Uber. So they're showing earnings growth. So I like those two stocks.
Yeah, good point. Uber was way down later in 2024, and hopefully there could be a recovery coming in 2025, but we'll see. Jason, are there any particular stocks or sectors that you like the most as we're heading into 2025?
So first I wanted to talk about cybersecurity. That was a great point by Marcus. One of my favorite stocks in the cybersecurity section is Sentinel-1. That's just S is the ticker symbol. That is, for like when you're looking at financials, that is a very solid, in my opinion, stock to have. As far as sectors to invest in at this time, because of the strong projected strong inflation, stagflation in the market, I would want to be in some property REITs, not mortgage REITs, property REITs and commodity stocks, commodities that are either useful or even metals. U.S. Steel, which is struggling right now after the failed acquisition by Nippon, that might be a solid buying opportunity just because of the assets that they hold. I also prefer holders of physical gold as opposed to gold futures. Ticker CEF is the Sprott Physical Gold Fund, and it's a better metals investment than gold funds based on futures like GLD, or even though those are more popular. In the second half of 2025, I would also invest in defensive stocks, established biotechs, Merck and all those large cap pharmas, and also consumer staples in the second half of 2025. Also, for better or for worse, in the pharmaceutical area, the middlemen for pharmacies is mostly dominated by CVS Caremark. There have been some legislation to try to eliminate that middleman area, but it seems like Trump is on the side of them. So I would be careful betting against them. So CVS, you might get a strong move, and on the other side of that, Walgreens may get weak.
I see. Well, good. You're picking lots of different sectors. These are not the most talked about sometimes, but these are cyclical names that could rebound in a big way in 2025. So now that we discuss some sectors and stocks that could do well and that you want to maybe get a piece of, speak to your financial advisor for our listeners out there who may be interested in that. Let's talk about some of the sectors and stocks we may want to avoid this year. Jason, I'll start with you. What sectors, what stocks are you trying to stay away from in 2025?
So first, I think financial deregulation will give the financial sector an initial boost. Banking stocks, etc. Also, clarified crypto regulations may help in that area as well. However, once this boost happens, I would avoid financials and avoid chasing it, because the overall downside movement in bond value that we've already seen and probably will continue will only get worse in 2025. This will render many regional banks insolvent. And that has to, if they do go insolvent, the FDIC has to pay out all the holders in the bank, and that they're picking the pockets of the larger banks. Also combine that with the private debt difficulties and the public debt difficulties for the globally systematic important banks, GSIBs. It's a recipe for financial stock implosion, even if they initially get a bump from Donald Trump deregulation. I also think that many speculative stocks will suffer as liquidity will become tight. Startups and small caps that are not related to commodities. So like oil stocks are not included in this necessarily, but like small to mid-sized biotech stocks, small technology firms, anybody who relies on debt in order to stay solvent will suffer, because I believe venture capital will get a lot tighter in 2025.
Yeah, the landscape is going to change in some of those sectors, whether it's smaller tech, whether it's some of the financials that you mentioned as well, Jason. They could take a bit of a hit in this new year. All right, Marcus. So to close us out, what are some sectors or stocks that you think investors should stay away from in this environment in 2025?
Yeah, so I think Jason made a really good point about financials, how you will get that initial bump, and then at the end of the year you could see a decline, especially with the fluctuation in interest rates. What happens if the Fed raises rates at some point this year, which is possible? That could be a real big shock to the market in general. This American exceptionalism trade that's going on, you need to continue it. It's going to continue, I think. International's not really a sector I'm looking at. I'd like to keep it domestically. As far as more specific, I think energy is another sector to avoid, just because I know we're going to this place where we're going to drill, open up all of the oil refineries, but we're already providing a lot of oil, already providing a lot of natural gas to other parts of the world. I think we're at some of the highest capacities we've ever been at. Once we open up more of these lines, the price of oil is going to go down, right? Historically, Republicans tend to do worse with energy in general, and Democrats tend to do better in energy over the history of the stock market, which most people may not believe or realize, but that's kind of how it works. Supply versus demand, as I said. So, and then just to circle back on the international, all the things going on internationally right now with Russia, Ukraine, the Middle East, North Korea, South Korea, Taiwan, and China. I don't see all of those things getting smoothed out anytime soon. Seems to be constant. So, yeah, domestic as opposed to international, and I would like to stay away from energy. It's not to say there aren't good energy stocks, but just in general. And that's not to say there aren't good international stocks as well. If you're going to invest in international, I prefer to pick the actual stock, not a sector.
Thank you again to Jason DeLorenzo and Marcus Sturdivant for sharing your insights on the stock market. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.